This is our Forex blog for August 7th, 2012, and there's three things that we do most days. One of our easiest trading methods, I like to call the easy three-step Forex trading system. Step one is use our currency meter, which you see here, and it shows you each currency, the yen, the dollar, the New Zealand, the CAD, the pound, and you can sort this and see the strongest ones on the top, the weakest ones on the bottom. This is the hourly trend right here, and it's showing you that the CAD, pound, Swiss are the strongest, and the euro, the weakest ones are Australian, yen, and New Zealand. So we have the real-time trend on the top, which is made up of 5 of our best statistical tools. 3 of them measure the direction, 2 of them measure the intensity of the direction, averages it together for a very easy to read indicator. Anytime basically you see a lot of strength followed by 15-20 minutes of weakness here during the pullback, the weakness has less weakness intensity than the strength, that trend's likely to continue. You'll see that throughout the day. You know, a lot of weakness, very little strength. Weakness comes back for about 4 hours right here. You know, a lot of weakness, little strength, the weakness comes back. And it's more likely to come back and resume the intensity of the last move if the longer term trends, the 15-minute, hourly, daily, weekly, monthly, are all in the same direction. So you can see the CAD's strong on all time frames. Earlier today, the yen was extremely weak for most of the day until about 10:30, with maybe a brief hour of strength right here. During these strength phases, it's basically pulling back and resetting and allowing you to, on the pullback, get into the direction of the trend, assuming it's going to continue, and most of the time it does. Now when it doesn't, you have a small loss, but when it does, continue the trend, you have wins that are many multiples of what your losses are. Sometimes 2, 3, 5, and occasionally 1 out of 30 or 50 trades, you might make 10 times more than you risk. You might be risking 8 pips and you made 80 pips, for instance. That's 8 times bigger profit than what your loss is. And that's the key. You don't care if any individual trade works or not. If it doesn't work, you get out. As soon as the trade moves 6 to 10 pips your way, you move your stop up in half, and then you're only risking 4 or 5 pips. If it moves up a few more pips, you move it to break even. And a lot of your trades that don't work, in my instance, probably a third of my trades that don't pan out are break evens. So that's another thing that you can do that helps you keep your average loss small while trying to get your wins as big as possible. We released a new tool last week called the FX Value Areas, and every night and every weekend I spend about 15 minutes putting in, and this tool actually analyzes every single trade of the previous day and the previous week, shows you the point of control, which is where most of the activity happened, and the average upper and lower value areas as well. You can see today in the pound, the price was above yesterday's value area. It came back into it. Once it broke above here, it's likely to go up. And it continued to trend up until it got to last week's point of control. This is the average price of last week. Looking at every single trade, hundreds of thousands of them of last week, this is where most traders had their position, and it's major support resistance. So it's no wonder that it stalled there. And so, looking at the currency meter again, you can see that earlier today the pound was very strong, the yen was weak. In fact, the yen was the weakest, but also the dollar was weak too. So this is one currency that you'd want to be looking to buy on pullbacks. This one went up a lot. You got a little bit of a pullback here, and there's a lot of ways to look at pullbacks. I basically look for 3 to 5 bar pullbacks, 15 to 25 pips. You can kind of visually eyeball a trend line over the bar's highs, and when it breaks back above there, you get in. Another one of our new tools we released last week uses very advanced digital signal processing technology, and you can just simply put a moving average on here, 5-period moving average, shifted 2 bars to the right, click DSP for digital signal processing, and this is a phenomenal method. It's primarily the one that I'm using myself, and it lets you know when a decent pullback is time to get back in. So you have a trend up, pulls back, once it goes above here, in fact, you didn't get long here, you waited 2 bars, you got in, and immediately went your way. Now the market kind of chopped its way up, you wait for a deep pullback here. This would be an example, you get in, it went up about 12 pips. And then sometimes markets don't pull back, they go sideways, but you always want to look at the strength on the bottom. There's no weakness, the momentum is to the upside, so when it breaks out, you get in, and you can also use this as a trailing stop as well. Notice this pullback right here, you're in, you made about 10 pips there, you're in, you made money. You're in right here, you probably lost on that one. So the pound yen was obviously a much better buy. This one is finding support at last week's value area low, and anytime that level gets penetrated, usually it works its way up to the next one. It pretty much shot through the yesterday's value area high, and once it does, you know, it's much better than buying the breakout of the high of yesterday, which is all the way up here. Yesterday, it spent 68% of its time between this value area high and, you know, a lower level. So when you can see most of the activity yesterday was down in this range, and so rather than wait for the high of the day to be, you know, taken out, which is way up here, you can get into a breakout right here and ride it up, ride it up, ride it up, and really ride it up here. This one went up about 100 pips. And again, you can use our digital signal processing technology. I'm trying to make this as easy as possible. You know, wait for 15 to 25 pip pullback. I prefer, you know, 15 to 25 pips. The stronger it is, the less likely it is to pull back 20, 25 pips. It's not going to. Super strong currencies, you know, a lot of times just pause for a few minutes and then continue, as you can see happen in this one. You know, right here, kind of went up, paused sideways, went up, paused sideways, went up, slight pullback, you know, and so especially the sooner you can spot a new trend, like right here, once it broke above this level without even stalling there, usually these levels are major support and resistance. The fact that it shot through there is a very big sign that's going to continue up. Pull back, look at the strength. It's off the charts. You buy, it went up a little bit, hit the upper band, pulled back. Notice how good these are for, you know, when to time your entries. You know, in the past, I'd be getting in, you know, maybe a few pips earlier here, but sometimes I'd have a losing trade. Now, I find that this has improved my winning, especially if you're focusing on, you know, the first step, which is using the currency meter. The pound was strong, the yen was weak. In fact, the yen was one of the weakest, and the chart pattern broke through this major resistance area. So boom, went up, up, wait for a pullback. I wouldn't buy this one right here. It's not enough of a pullback for me. This one is. You get in, small profit. You know, you might get in right here. Notice there's not that much weakness. It's not able to go back below the value area high, and you get another buy signal right here, and this one, you know, took off. I wouldn't necessarily buy this one. That's not enough of a pullback. The farther up it goes, I want a deeper pullback. This one pulled back right here. We have a buy signal, and that one, you know, you might have made 15 to 20 pips max. But you know, let's just try to find some other examples of where the value area. Dollar CAD, I don't typically trade this one myself because it doesn't move enough pips to make it worth my while. But look at last week's value area, point of control. This is where most traders had their levels, most trades at, and major resistance. Wasn't able to get above there, so it's pretty much telling you it's likely to go down. The daily, weekly, monthly trend's down. And, you know, this is a great place to get short, and this is a good profit target installed here. Once it broke down underneath yesterday's value area low, it's a pretty decent place to go short. You can see it fell another slowly, you know, slow as you possibly can go. It fell another 20 pips.